Hello everyone, my name is David. Just wanted to basically get started this evening on our webinar, and I just want to do a quick sound check. Scott, if you can let me know that you can hear me, all good? Excellent, guys. Give me 2 seconds. I just want to scroll through another chart and see if you can catch up with me. Alright, perfect. Alright guys, what I'm going to do, I've got one of my monitors down today, so I'm going to be working at one monitor. So I'm basically going to literally quickly go through the disclosure statement that we must obviously read here at Admiral Markets. Then I'll go through obviously what we're going to go through today, which is pretty much the second part of my webinar. I'll try and keep pace because I know that sometimes the charts don't quickly move to the way that I'm talking, so I'll try and keep the best of that. Bit of an issue with last week in terms of I couldn't hear questions and answers, but what I'm going to do for everyone that attends today, I'm probably going to do a quick follow-up with them, maybe just give them a quick call or something like that to answer any further questions that they had, and basically go through anything that they need. So more than happy to do that. Obviously there were a lot of questions last time, and obviously the function didn't work here, so I do apologize about that. Let's get straight into it though. I don't want to keep you guys too long tonight. I want to keep it short and very sweet. Obviously, I'll go through the explanation. You know, obviously it's one thing to explain something, sometimes it's another for someone to pick up. But like I said, this is going to be recorded as well. I'll be able to get everything going and we'll go from there. And like I said, we'll get started. I've got to read this disclosure warning, so just hear me now and I'll finish this as quick as possible. Admiral Markets is regulated by the Australian Securities and Investments Commission. Before using Admiral products and services, please refer to the product disclosure statement, financial services guide, and terms and conditions. Any information contained in this presentation, including any news, research, examples, prices, and commentary, do not constitute financial advice. This content is provided for the purpose of assisting traders to make independent judgments and is subject to change at any time without notice. Admiral is not liable for any losses or damage including without limitation any loss or profit which may arise directly or indirectly from the use or reliance on such information. I will slow down when I talk going through the presentation. I'm just going through this now. So risk disclosure as well. Trading foreign exchange carries a high level of risk and may not be suitable for all investors. The high degree of leverage available can magnify profits as well as losses. You can lose more than your initial deposit before trading. Please carefully consider the risk and inherent costs in seeking independent advice as required. There are also risks associated with online trading, including but not limited to hardware and software failures and disruptions to communication systems and internet connectivity. Admiral utilizes numerous backup systems and procedures to minimize such risks and reduce the duration and severity of the disruptions and failures. Admiral is not liable for any loss or damage, including without limitation any loss or profit which may arise directly or indirectly as a result of failure, distributions, or delays. My English teacher would be very happy with me right now after that. Let me close that down. Alright guys, now that disclosure statement's out of the way. Basically, before I get started, look, this is, like I said again, welcome everybody to my webinar here at Admiral Markets. This is going to be part 2 of my trading webinar that I did a couple of weeks ago. Now, if you don't know who I am, like I said, my name is David. I'm one of the traders here at Admiral Markets, and basically I've been trading the markets currencies for about 3 years now. So what I'm basically doing in these webinars is basically giving you a bit of the live trading scenarios where it's hard and difficult to find them these days. Especially after the fact and things like that. If there is an opportunity, I will be looking to take it, but today was excellent for trading, especially my favorite pair, the Euro Yen. I'm going to go through and break down and actually show you the results that I completed to actually show you a screenshot of my profit. Now, that doesn't mean that I don't make losses here. This is, like I said, this is general advice, but the reality is I'm going to go through and show you what I did today and go through the workings, so it makes it easier to understand basically the trades that I took and what I was thinking at the time, because that is very important. A lot of people just think that they use the same strategy over and over again, but there's a lot of things to take into consideration when trading, as I'm sure you all are aware. Trading the markets in general, a lot has to do with time of day as well, so I'm going to go through that and work off just this simple chart we see in front of us, the amount of opportunities that were here and what could have been done today. Don't worry about the little arrow here. I'll explain what that means, as I want to show you this setup before, what I was looking at before it actually came, because these nice little breakouts, and don't worry about all these lines because I'll explain pretty much the lines as well. They're just simple inner trend lines. and we'll go from there. So my last webinar took me through the basics of me, using pretty much inner trend lines as the bulk of what I trade with. So many people these days probably steer away from trading using trend lines because probably they don't know how to properly draw them. But they maybe sometimes think it's too easy. And when things are too easy, then it doesn't make sense because apparently it's got to be hard, which it doesn't. Once you understand in context of what you've done, trend lines is probably the most widely used ways that I trade the markets and do quite a good job with it with regards to using them. Like I said before, I'm not perfect in any way, shape or form. I make mistakes. I have losing trades as well, just like anybody else. But as long as my account grows, I'm happy. It's as simple as that. So today, pretty much, I'm going to show you my setups, what I did. I took a screenshot as well before the fact, which I'll go through as well. But what I want to get through today's session as well, because everything I did in my first webinar, and you can get a recording of that as well, it wasn't on the website, but I can figure out another way, was about the whole bulk of what I look at. Okay, I want to break it down, each and individual webinar that I do, to specifics. For example, a lot of people have trouble with targets. Okay, how do I place a trade and know where my profit target is? And I'm thinking, whenever you get into a trade, and I struggled with this at the beginning, entries are actually easy for me to come past nowadays, but looking for getting the most out of it, and I still do it today, where I'd get into a trade, 20 or 30 pips, I like taking 10 pips no matter what, but and then I look at my charts half an hour later, sometimes even 5 minutes later, and it would have tripled my return. So it's one of these things that I constantly work with, but using a couple of techniques. Today's session is going to be on basically looking at my trade setups and how I use Fibonacci, basic Fibonacci, in realizing where the likelihood of me to place my profit targets. So I'm going to be looking at that today. My Fibonacci's that I use. Basically, I'm a short-term trader. I don't scout for 1 or 2 pips. I like to go for 10, 20, 30. Look, I take out at 10 pips. If you don't know, that's what I like to do. First of all, if I don't like the trade, I'll manage it accordingly after that. My stops I don't like to keep wide as well. No more than 15 pips. Therefore, if I get a 30 pip trade and I have a profit target, a stop loss of 15 pips, I'm quite happy. But what I'm going to go through today is basically on my trade setups. There's 3 I had today, just on this picture alone here. This is a live. Obviously, it's trading live right now. And basically, I'll show you before when I took the screenshot, hoping it would be great if it was live today. Right now, at the exact moments I took these trades. But I'm going to go through and show you how I did them and what my thought process was. And like I said, using the Fibonacci's, if I'm looking for a really short-term trade, how I use Fibs. And if I'm looking for my 30, 40 pip trades, more how I use the Fibs as well on that. Please note, my disclaimer, Fibonacci for me, I don't trade off it solely. What most people like to do in the conventional way is, and I'll show you an example. For example, here's an example on Euro USD. I'll wait for the chart to catch up. It's a swing low here and a swing high here. You would basically draw your Fibonacci with your Fibonacci tool on the MT4, basically, and then you use the lines as support and resistance. And look, I like this. The reality is I don't trade this because my patience, for me, if I waited all the time, it keeps me out of the market. For me, I like to be a short-term trader. I feel good and comfortable with the way that I trade. That's why I traded. It took me a while to get there, so it wasn't in one day or anything like that, like some people may say. But for example, you look for it's anything with trading in general. When you're drawing trend lines, you're looking for the most hits as possible. If you can see here, this is on a daily chart. If I break it down to the 4-hour chart, just to show you these examples, here we go. It was from that swing high, swing low. So here's the move down. If we look at it from here, the swing down, tag the 23.6, came down, tagged the 38.2. If like I said, if you actually bought this here, you actually done very well. This is Euro USD. This move alone is like over 100 pips, just the bounce from here. If you're trading Fibonacci naked, which I don't, I'm just letting you know the conventional way. Came down to the 38.2. It pretty much came to the T, bounced up another 100 pips. Went through a bit on the 50%, came down to the 61.8, went to the 79. I really like the 79% when I can match it with support and resistance. If I go back to the daily chart, here's support and resistance on my daily chart. Well, here we go. If I put that line there, you can see hit there, 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 hit there. When it came up, came down, 79 plus this. I know it doesn't look like it, but when you break it down to a 4-hour chart, you can see what actually happened. Let me slow this down for you. This is just, workings of it. Literally, if you bought it right when it hit the 79% retracement, came up, that's another 100 pip move just there alone. So that's how the conventional way of using Fibonacci. If you haven't used it before, definitely take a look at it. If you're a longer term trader, it's a great way to trade, but only when you match Fibonacci with support and resistance. Okay, let's get to the fun stuff. Let's get to price action today and what happened. Like I said, any questions at the end, don't worry about them. I will try and contact each and everyone on this attendee list and just basically try and answer your questions that way. And like I said, I'll be able to figure it out from there. All right, so here we go. Today, this is the euro yen. Like I said, that's my favorite currency pair. The reason is when I'm trading the way I like to trade, when I trade this pair, when it hits the exact position that I want it to hit, it moves quite quickly, easily 10, 20 pips. It can happen literally in a couple of seconds sometimes. Sometimes I have to wait an hour, but either way, it's a really good pattern. So what I wanted to focus in on today is this trend line here. So if I have a pointer, hopefully you can see my pointer, this one here. Okay, basically this line here was the basis for the 3 trades I could have taken today. I only took 2. I missed one by a couple of pips, being obviously greedy, but hey, in the end, I'd rather be greedy than let price do what it wants against me. I trade within my rules. If it doesn't hit my rules, I come out of it. If you chase the market, that's where people get into a lot. You probably heard it a lot of times, but chasing the market gets you nowhere but red lines all over your charts. So let me break this line for you down. This trend line you see going up. All these other lines, I'll explain that too. But basically what I do, let's look at the hour or the 15-minute chart. Let me squeeze it down for you. Now what I want to do, let me hide something that's in front of me that you guys can't see. Now this is basically this line I was talking about. Hopefully it catches up in time. This line here, let me just delete this. And I wanted to keep this line here for some reason, but I will move it at this stage, just out of the way. So basically I'm playing with this. Now why am I using this line? Now if you're looking at price action, the way that I look at trading trend lines and things like that, I'm looking for a line on the chart. The normal way people would trade this or by using trend lines is literally adding these dots here and here and probably here and here. I would still draw these on my charts as well, but I would use them for more as like maybe places to exit a trade. I don't trade the majority way people trade trend lines. I would trade them. Let me delete them off. The way that I trade trend lines is inner trend lines. Learned from a very, very good mentor. Mine, guy by the name of Steve. Check out his website, please. Always give thanks to the people that have obviously made a difference in your trading. NoBrainerTrades.com. Excellent read for you guys. But like I said, for here, this trend line here works great for me because it starts on this one. I get one tap there. I get a bit of taps here. This is on a 15-minute chart, mind you. Get another hit here. This goes through but rejects straight away. Get another hit here, another hit here, another hit here. A few little not so great hits here, but then it starts again. 1, 2, 3 hits here, 4. So perfect. So basically, when I see lines like this, I'm setting up my day. Basically, from here is where I started looking. Don't worry about that arrow. I'm going to break that down. So that's the 15-minute chart. It's a simple line, but I'm looking for connections. Now, you can draw them yourself. Try and find a place that connects, a few times. And like I said, look, this isn't as great as the one that I see performing there, but you know what? It's still a trend line. It's an inner trend line. I would like this to be, tagging a bit more. 1, 2, broke through, use the back end of it, broke through, use the back end of it, broke through, use the back end of it. Obviously, there's a lot of slippage there. It tags it again. But look, even here, it respects it here. It starts trading down. This is in real time. Remember, 15-minute chart. So about an hour ago, it was tagging it and didn't break through it. But let's just get rid of it. It's as simple as that. They're called inner trend lines. I really like this one because it actually hit a few times on the line directly. So when I'm looking for this setup here, when it comes up here, I want it to break through retest the back end side, and go long. Okay? Let me break it down for you to my 5-minute. Remember, I look in the 15-minute for my setups, then I break it down to the 5-minute chart now and fatten it up a bit so we can see it all in one. Give me 2 seconds. This is the trend line. Hopefully it's going to catch up. I wish I could make it a different color. Well, let's actually try and make it a different color. Let's make it red. And maybe a bit thicker or something so we can concentrate on that. There we go. That's pretty cool. Alright, this red line is my major trend line. Okay. Now, coming back here, don't worry about this. We'll look in the 15-minute chart. When this started to come down here and started to work its way up, I'm eyeing out this line. Now, a couple of trades I took today. When this came up here, and this is where I'm going to start showing the Fibonacci and how I got out of my trade. This is a way, this basically here was my setup. Now, a couple of things. When this came back, it started to reject here a few times. Now, I remember I'm looking for it to break through, retest, and go long. But I took a trade here going short. And why did I do that? If I get rid of this trend line, because all these trend lines in here make a purpose. Obviously, I can't explain them all. I'm going to try and keep it really sweet and simple. This is my trend line here. Now, this is early Asian session, you know. Now, the good thing about the Asian session, if there are hardly any news announcements out, trading things like Euro and things like that probably don't move that greatly through the European session. For it to break this trend line, there has to be a lot of momentum behind it. This is around early European session, and especially over here. So this area is where a lot more liquidity comes in the market. Let me explain this one. This is one of my two favorite trades. So when I see sort of like a line come up here where I can see one hit here, ooh, let's see if I can name it 1, 2, and 3. Okay, we'll go with some checks just to make it one hit there. On a 15-minute chart, it's a lot easier to see, but I'm just going to put check signs so I can sort of relate what I'm saying to you guys. Okay, so here we go. This is like a triple tap. Price is coming from a move up, makes it one high, makes a higher high, comes back, makes a third high. When it makes that third high with an area of support and resistance, I'm happy to take this on a really short trade. Literally going short here for me. I'd usually wait for this trend line. There's a lot of hits on this one. 1, 2, 3, 4, 5. The back end of this where it broke through, closed, and that line came to the back and hit that to go short. But I was actually quite confident to take it up here. Okay. The reason is this trend line that I'm waiting to break, which is interesting. I actually took this trade here and basically got in, ran, and I'll actually show you the result of this actually from my MT4. So around 126.33 or something like that, and basically came all the way down to the back end, this trend line here, 126.05, let's just say. Basically, that's about, you know, looking at about 25 to 30 pips on that trade alone. It's a simple one, but I'm happy with 10, 20 pips. Remember, if I'm trading at $10 a pip for myself, that suits my psychology. If you trade minis, that's great. If you trade micros, that's great. If you trade 10 lots, that's great. As long as it fits into your comfortability zone where you're happy and you're not over leveraging yourself, that's great. I took this one here and I'll basically show you what I did. Now, I actually wrote this. This was live at the time. I took a screenshot of it. Sorry it's on Word, but it's the best I could do. Basically, I took the sell here and this is what I wrote. Sold on these rejections, 3 higher highs and a trend line for confirmation. This is the trend line going across. I have 1 high, 2 highs, 3 highs. I see a rejection, wick. I see a wick. I see a wick. Look, you know what? I gave it a shot. I sold it. My stop loss wouldn't have been no more than 10 pips for this trade alone because it had to carry through and break this trend line that's hit we've seen on the 15-minute chart so many times. It actually came down very nicely. I actually got out right at that point. Now, I also said note. This is to show you that I was looking for this breakthrough. No, wait for this horizontal line to break to trade it long. Okay? Now, I was waiting for that for quite some time. So, in the meantime, I saw this trade make a fruition. I took about 25 pips on that. Funny thing is, this eventually did happen, and I didn't utilize it as best as I could. But that's trading. I live to fight another day. So, basically, on that first trade, I'm just going to show you this is the MT4 printout, just to show you that the trade was taken and I'm not, making this up. I don't know if you can see it, but basically it's here. I was selling one lot, Euro Yen, at 126.29. I had my stop loss, well, I did move it afterwards, so I had it closer at 126.24. Obviously, that's where it recorded after I managed the trade. I had a profit target of 125.93, which is quite far down. I like to put in a wide stop and then later, but I cut it, the trade, for me, at 126.07. So I got in at 29, sold at 07, that's like 22, 23 pips. My profit, 237 for the day. Like I said, this is not to show you that I'm an unbelievable or excellent trader because I'm normal like everybody else. This is just what happened today. Basically, I'll come back to that as well. That's just to show you that. So that's what that happened there. Now, why did I come out here? Let me go explain it here. So we've got our 1, 2, 3 taps. The third tap touches the trend line, which is support. Now, for it to carry through here, you'd have to try a third time. Now, it's Asian session. Not so much liquidity in the Asian session. So taking a short here was a really, a comfortable trade for me to take. Now, I started drawing this trend line for 2 reasons. It's hit once, twice, 3 times, and actually went to my profit target. Literally, that's where I took out the trade. What I also did was draw my fib. This is what I'm talking about now with my short-term stuff. I literally draw that line from here to here. Now, this lines up pretty nicely with the 23.6%. Okay? With this, that's my confirmation for me to get out. I usually try and take the 38.2. But if there's a trend line that's not major at all, but if there's a trend line that hasn't broken through, for it to carry through and there was no news announcements to carry it through, I thought, you know what, I'm going to take I only traded 1 lot. Usually I would like to trade 2 on this, so I can take out here, move my stop loss to break even or even plus 5 or 10 and see what happens. In the worst case, I would have got out, it would have hit my stop, but I would have been still another 5 pips in the bank. So that's how I use fibs on my short-term basis. And you just literally draw it from the swing low to the swing high. Yes, it's on the 5-minute chart. Yes, I'm not trading off using Fibonacci. I'm just using it for the simplicity of knowing where to take first profit target. Okay? I like to take 10 pips. Because I only got 1 lot in here, I did let the trade ride 22 pips or 23 pips to the back end of this. Because usually price will usually channel its way back down to the trend line to either bounce off it, which it did, or continue breakthrough. When it broke through here, I wanted this to happen so bad. I wasn't looking good when it broke through this trend line, started trading it down, but momentum took it up. Actually, the USD Japanese yen was moving that up, so it started to come back. It's like when I trade the Euro Yen. This is what I actually look like when I'm trading it. If I come here, and I come here. Yes, I have the Euro USD open as well, but this is just to me because this is a big mover. USD Japanese yen moves the Euro Japanese yen quite formidably. When there's support and resistance on this, this will likely react off of 2. So when they both line up and they both break through and they both retest, I even like that for more confirmation. But let's just go back to my chart. So that's how I use Fibonacci. Hopefully I'm not rushing things too much. I'll take it off my chart. Actually, that was the trend line. And I'll reapply it. So this is the 1, 2, 3 tap. I did draw this trend line here as well, beneath the 3 ticks, because that is more probability for me. When that broke down, closed, hit the back end of this trend line. Let me highlight this and make it fatter for you to see at home. That's more confirmation, but because I'm used to trading this pattern and using its support, I took it a little bit higher, and instead of taking out, I added another 10 pips to my trade instead of taking out 10 or 15. Okay, this trend line gives me confirmation when this 1, 2, 3 taps. There's the line we were talking about before, breaks the bottom end of this trend line, retests it, then sell there. I sold up here, but I'd usually sell here, come down to here, and come out of the trade. Now, this is the screenshot. I'll wait for that to load for you guys of what actually happened when I took out the trade. Okay, that was the arrow saying that it was going down. This arrow was what I was looking for. I want this trend line to break so I can take the back end of it and go long. Okay, I like the fact that I've got a low here, a higher low, higher low, higher low. If this low doesn't get breached and trades up above, the probability breaking and retesting and going up is going to be very high. Okay, this was definitely something I took a screenshot of before price happened. I wish it was in a live situation. I would have shown you me taking it live. And this is what actually happened. Let me get rid of this trend line. Delete this trend line. Delete. Get rid of all these. I want to just concentrate because this is the major trade I wanted to take. Okay, by the way, there's a little triple tap in the down end and then actually traded all the way up, which I could have actually taken as well, but I didn't. And I don't want to confuse the situation. I want to look at the basic step of this. We've got the low, 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 low. Here's what I was waiting for. Here's my screenshot again. I want this line to break. Okay? So, coming back here, look what happened today. And this is just basically in early European session. I don't know the time frame. I do know the time frame. I'm not too sure the actual time that this occurred. But when basically around 4 o'clock Sydney time, you know, momentum starts to shift, Europe comes in the market, and that's perfectly what I wanted for momentum to carry this trade through. Remember, I'm trading the Euro Japanese yen here. So look what happened, and this killed me because obviously I got 22 pips on this move down here. I wanted this to break it. It didn't break it. Came back down, still made a higher low. Here's a low, here's a low, here's a low, all the way up. It finally broke. Excellent. It moved with momentum basically very fast. Now, what I mean by that is when I broke up, I want this to open. Let me bring this down, make it a little bit fatter for you guys. Let me see if you guys can see what I'm seeing. Give me 2 seconds. This is important here. Let's view. Okay, great. Excellent. You guys are the same page as me. Awesome. All right, this broke through. Okay, this is great because this also, on a 5-minute chart, was also the last 5 minutes of the 15-minute time frame. When these patterns occur, I want the 15-minute candle basically to close. This 5-minute candle was in line with the 15-minute candle closing as well. So when it did, I want this candle. Let me arrow this candle down so we know what I'm talking about. I want this candle to open and come down and touch the back end of it. Okay, I missed my trade, pulling my hair out. It's 126.378, 126.35. 2 pips. Could I have taken it? Should I have taken it? You know, we can all talk in hindsight, but it didn't. It didn't come to my rule, so I missed the trade. I missed the boat. But basically, if I did, look what happened. This is exactly what I was waiting for. If I did get in, let's just say here on the next candle open on 126.39, I wanted to get in around 126.35. Traded up, up, never looked back, never looked back. Traded as high as 127.76. I'm getting in, let's say 127.40, worst case scenario, 40 and 76, 35 pips, very nice. Okay, that's okay. Do you want to know why I didn't actually get too unhappy with this trade? And what again, look what's happened again, familiar pattern again. Let me show you what I'm looking at here. Check sign. Let me move that there. Check sign again. Now obviously if you missed my first webinar last week, I suggest you either write into me or try and get a copy of it because this probably is not the easiest thing to make sense, but it's not difficult as well. Here's the triple tap again, high, a high, and a high, basically all coming to line. You know what, on the back end of this, could have traded this short as well. But I didn't because I don't want to overtrade. I'm looking for the best trades I can. If I did, you're still looking at around about, well, the back end, it didn't actually retest, but there's nice follow through right down the back here, which is easily another 30 pips on that move down. But let's get rid of that because I didn't trade that, and I'm not saying that I would have, but just showing you the patterns, which is important. Getting to know the patterns price action. It's what it's all about with regards to the way I trade. Not saying for you to do it yourself, but just have a look at it. It may help you, especially if you like to trade with, fundamentals. Trend lines, trend lines, trend lines. When this baby broke, a lot of people were shorting, you know what? And I was taking it long. I wanted to take it long because a major trend line, what I call it's not a major trend line in terms of the daily chart, but on a 15-minute time frame, 30 pips is great for me. I'm happy to take 30, 40 pips from a 15-minute trade, you know, and it never really came back and annoyed me. But look, I missed that trade. I'd be the first to admit it. Was I pulling out my hair? Yes. But you know what I was doing? I was waiting for it to come back down and do a swing retest. This is your price retest. More than likelihood, it comes back down for a swing retest. I'll only look at that as well. I might even trade it twice. Here, if I got in here and it retested, I maybe would have taken that again. I liked this trade here because it came back swiftly, so it means that it's easy to fill these, these long candles on the upside. That's a whole other topic, which I'm going to go into next webinar, which is about, gapping. Well, not gapping, but in terms of long candles and what they mean to us. So that's a whole nother story, but we'll get back to that next time. This came back to the pip. I'm not joking. This came back to the pip. I got in around about here and I took the trade coming back here. This is my limit buy that I had, which I cancelled. You can obviously see because there's no profit, there's nothing that came through. Silly of me to cancel, but I like to trade things in real time. I take market orders more than pending. But this was pending 1.5 at 126.37. Let me go back to this chart. 126.37. It came back to 126 as low as 126.35. Would have got in with 1.5, and obviously got in the trade up. Never looked back. Straight off that trend line to the pip basically, and moved up. Nice trading. I love it when price action moves so beautifully like this because it's so easy to manage your trade. Okay, I have like a 10, maybe 15 stop, but as soon as it moves in my favor, I'm moving that stop loss to -5 or break even, or even moving it up. I took out in my haste because I had to do other things, and I don't like to leave trades open. I took out. This is the trade here, the last one on the bottom. Hopefully you can see it. It's a buy, one lot, euro yen, 126.39. I got in a little bit late. I wanted to get in 126.36, but it doesn't matter. I cancelled the trade at about 11 pips in my favor. Boy, was that a mistake. But $109 plus 127 for the day, 350. I'm okay with that. I'm not trying to make everything run. If I can learn my way to take money out of the market on a consistent basis, that's what I care about. I got in on this trade, literally got out about 10 pips. The thing kept on moving, and like I said, but if I'm not managing the trade, I'm not in the trade. It's as simple as that. Because anything can happen. Obviously, there was no price data coming in, or news announcements, but like that's trading. I'm sharing with you what I actually go through my actual trading history here. So it's one of those things that it's not something made up. I did keep a note of this. Like I said, I wanted this trend line to break, and when it did, I was going to be all over it because it actually worked out very well in terms of timing. Now, let's get back to, they're the trades I took today. Hopefully they made sense. Now, I want to go through and show you how I would manage this trade for basically the using Fibonacci. Now, simple with this. When this came through and broke through, and I didn't get in on this one, but I got in on this one. Now, if it happens a third time, I'm not taking it. I don't care. It may work. It came down, didn't even touch it, and kept on trading up. That's fine. Looks like it's coming up even further. The reality is, I only try it on the price or the first swing retest. Okay, that's me. That's the way. That's my rules. I stick to my rules because I know when I don't stick to my rules, what happens. Don't worry. I go through it just as much like anybody else. But how I would manipulate a trade like this. When I'm looking at this for the 15-minute chart, remember, here's my red trend line. Hit here, price muddling around here, hit there, hit there, hit there, hit there, hit there, hit, to the pip. Beautiful trade. Excellent. The minimum to maximum on that, like I said, was pretty good. Easily 40 pips there alone. When people say, okay, now I showed you some really short-term stuff for when I trade triple taps and things like that. I use the 38, sometimes the 23 depending, and I use trend lines. Trend lines, trend lines, trend lines. for areas of, you know, profit taking as well. But for this, let's go down to the 5-minute chart. Now we're looking at this move here. Now what I would normally do is I want to add, I'm going to keep it on the 15-minute at this stage because I want to add something. Now I come here and I click my Fibonacci tool. I come here, I'll just draw it down for you and hopefully you can see it. What I want to show you basically are my levels. Okay, these are my levels. You may have different levels. This is what I use. This is what this is all about. Okay. Now, my Fibonacci is quite simple. I have the 23.6, the 38.2, the 50%, 61.8, 78.6, or the 79, people like to say, 100%. Now, for my extensions, 127.2, I don't really use that anymore. But these are the two important. This is the most important, 161.8 and the 200. Okay, 200 is basically what you know my mentors have basically told me as measured moves. Okay, so when you're measuring a move, this is a great tool to use when you're looking at trading in general, the way you look at it. So for example, see this high here, and I'm going to put some, let's say a check so you know which one I'm talking about. This high here down to this low here. This is where it broke out. Where's my check sign? Broke out and did the retest on the back. So now if I move, just to show you where it is. This is not my live example. I will show you that now. But basically when it comes from up here and comes down, I like to take, you know, something that's not too, I like this one here to start this move from, but let's just take this one from here as a measured move to show you a profit target where this could possibly be. Now, we've set up our Fibonacci with the 161.8, which is the golden ratio. So worthwhile you putting that on your Fibonacci because I'm sure you all have it already. But basically what I will do, where it broke through and did the retest on the back, I will literally bring my Fibonacci tool and draw it backwards right up to the high and let go. Okay? What I'm basically doing here is showing you where my measure move would take me. Okay? Like I said, it's quite simple. I simply use the 161.8 and the 200. This is on the 15-minute chart. Hopefully that will bring it back into perspective. Let me get rid of that trend line. Okay, now what I'm doing here, if I fatten it, let's see what happens. Yep, that looks much better. Okay, this is on the 15-minute chart. This is in the Euro Yen, like I said. Trading has come from this top, come down here, broken through because it's established its hits along here, and I like it when this breaks through. Where am I taking my profit target? Well, look, I take 10 pips anyway, but if I'm trading like this, I like to at least trade 2 lots, depending on my risk management. For me, you know, 1% rule is great. You know, I sometimes go further than that, 2%, and things like that. But that's the way I do it. And I'm not telling you how to trade yourself. You've got to feel comfortable in your own trading skin to know what works for you. For myself, I don't mind 2% risk on my trade, just because I have tight stops and things like that. So it's okay for me. Here, it basically broke down. Here's the 127.2, which I don't pay much attention to. I pay attention to the 161.8. If I put my first profit just a bit higher, just a bit, because sometimes it tags it to the pip and moves off it, I take out my profit right there, at least my first profit target. What I'm looking for on the 200, that's the finish move where I take the full profit out, is basically I want the 161 to get breached, at least broken, and traded below. When the 161 breaks and trades below, it will usually go to the 200. And that's basically what I utilize as my profit target. Okay, and it's vice versa. Now, let me show you in this live scenario today that I would have taken if I stayed in the trade, which I didn't, but that's trading. Okay, so let's do the same thing. This high here, it broke through here, so I literally bring up my chart and I bring my Fibonacci tool. Now the move came from below to above to the line, broke through and traded up. So where is this gonna go, or where could it possibly go? We don't know. No one will actually know. If they tell you they know, like I said, you know, don't listen to them. Trading's about experience and what happens based on experience, and that's why it's good to obviously experience the market, because that's what actually helps drive your learning and internalizing everything and understanding the anatomy of a move. Like I said, when people for me, a lot of people, even clients as well, were selling around this level. When it broke through, there was nothing else for me to be looking at but a buy on this type of trade. But that, obviously, because it broke my trend line, okay? Possibly people were looking at other things, but that's no problem anyway. It's all about learning here and, exchanging different things. Hopefully, like, something comes out of this that you traders can utilize yourself. Hopefully, I'm making more. The thing I want to stress the most is trend lines that are used in inner trend lines, things that people don't usually look at, but they're the ones that get the most hits. The stronger, the more amount of hits a trend line gets, the more powerful that trend line becomes. When that trend line breaks, that's a confirmation of momentum. Okay, that's what we want. If I have 10 hits on a trend line and it breaks and it retests the back end of it, that's used as a launch pad for it to be going in that direction. That's what I'm looking for. That's why I really love this red trend line, which I drew, like I said, on the screen print before. This, obviously, this, what is this called? An arrow was pointing at this trend line here going long. Finally broke through. That was basically taken about here. But now, once this broke through, where is this trade likely to go? Now, if I just use my Fibonacci tool, draw it back here, and let it go. Okay. If I'm looking at this from a longer term basis, where I'll be actually managing this trade, 161.8 is my first profit target. If I draw a trend line here, a horizontal line, remember I'm putting my profit targets beneath the actual line because I want that to hit first. If I put it above it or on the 161.8, remember you have to take into consideration spread. We don't want it to miss our profit target by a bit, but that will be first profit target. And if it breaks through and breach that, and I'm quite comfortable not to exit the whole trade, my next profit target will be the 200%. Okay, or relevant trend lines. Simple. I obviously took the trade out at 10 pips, silly mistake. But, it's moved up. 127 I wouldn't have taken out on, but remember, I manage my trade. I'm out 10 pips, move my stop loss to at least break even. If it's moving up 40 pips, look, I'm done for the day. Sometimes, I'll be taking this trade from, this swing high. It hit my 161.8, and my 200 is right here. Let me get rid of that trend line. So it all depends on where you like to take it from. Obviously on this move, the closer it is, the last sort of swing is probably the best one to take, but this last swing here, it's really minimal. For me, I like, when this has been hit so many times, I like it on the way up. Now, does it mean it's going to keep on going up and up and up? No, it doesn't. But as long as I'm managing my trade, I don't know what everybody else likes to go for. Maybe they go for 200 pips, 300 pips, but this is not the way that I look at the market. It's not the way that I like to trade. If you do and you feel comfortable with it, excellent, continue on. Maybe utilize some trend lines internally inside. This works on a daily chart as it works on a 5-minute chart, okay? Like I said, draw the lines, just try and look at the things that people don't see. That's what we're trying to discover here. Even like a trend line here. This is a inner trend line still. But let's just say, look, where does this really work? Well, if I move this up a bit more here, you know what? It actually makes a lot more sense here. 1, 2, 3 hits, 4 hits, 5 hits, 6 hits on a 15-minute chart. When this breaks, we're still going to get through this red trend line, which is the major one to go through. But if it breaks both, then we can be looking at a nice trade. I wouldn't trade this trend line. I'm just going to stick it here to see what happens. Because you know what? It's going to be used somehow, some way into the future. Okay? And that's what I mean. If I went back and kept all my little drawings on this chart as I did in the beginning, it all makes sense because the trend lines will be used and used and used time and time again when you're drawing inner trend lines. That's the great thing about them. That's why I draw them all over my chart. And sometimes, they may be hard to find, but, other times they're not. Have we got anything here? Not really. Not really. I don't like it, so I don't use it. Oh, that is a thick trend line, by the way. Make it a little bit thinner. I had them all set up as I go throughout my day, but like even, looking at a couple of hits here, like these 2 hits here, like does this trend line cause much weight? No, because it's only been hit twice. So look at all what's happened here. Some people may trade that, I don't like it because it doesn't really fit into what I was talking about before. This one still hit twice. It did respect it on the back end going up, but look, I'd rather not 1 hit, 2 hits, I want many hits. Hopefully I'm making that clear. This red line is great. It's got 1 hit, 2 hit. I'm not a magician. I'm not finding something that's not there. And these are all over your charts. Like I said before, if I draw another one and I could just draw them and try and get as many hits as I possibly can on these lines, all the more better for me when I'm looking at my trading. You know, that's, where is it going to fit? Probably around somewhere around there. And if I look at this, started from here, direct hit, almost direct hit on this candle, broke through and traded above. I was showing this example, direct hit here, another one here, another one here, and look what happened here. This trade right to there. So that could be, guess what? If my 161.8 and my 200 are above this, maybe I'm looking to take out profit here. Why? Because it's a strong trend line. Could I have taken a short here? Well, yes, I could, but I would rather take a break of this on the upside. So now looking at this on the 15-minute chart, depending on time of day, obviously now there's a lot more liquidity and things like that. But you know what? I'm going to leave this on here and I'm going to see what happens, obviously when this breaks through. I've got a nice trend line here. Obviously, we're looking at this going up, up, and up. You know, it's good as long as it maintains this. When this breaks through, if it retests and hits this spot directly, hey, you know, I'm going to probably get a nice bounce here. This one is better, the red one, because it's hit a lot more directly, but this is, you know, this could be plausible enough. If I go to the hour chart, you know, it looks kind of nice on an hour chart. So I'm going to have a look out for this one, and if this breaks through this evening, look for the retest on the back of this trend line. Hopefully I can, let me fatten up. This, I'm bringing it to the hour chart. Not that I look at it a lot, but I'm just putting this in the hour chart, so hopefully you can draw the same line and then break it down to your 15 and sharpen it up, and break it down to your 5 and sharpen it even more. When you're coming down to the 5 and 15-minute chart, you want direct hits. The line, your trend line, to be touching as best as possible. When I do in the hour time frame and I break it down to the 15-minute chart, let me draw it here. Hopefully it's going to catch up in time. Let me see if you guys can see what I'm seeing. Audience view. Yep, it's caught up. Great. This trend line here, now watch this when this breaks as just an experiment, okay? Hopefully I've got it up here long enough that you can look at it on your charts and draw this line yourself, okay? And see what happens with this line. Don't trade it, see what happens. If this, like I said, if this breaks out here and then retests at this point here, let me do another tick. Oh no, I'll draw an arrow to make it really nice. That's going to give you a lot of confirmation because it's broken through, it's back in, it's supporting by this trend line, forget the red one now, and it's supported by this trend line as well. The likelihood of a reactionary point where you can manage a trade could be it's much more probable. Remember, look at your forexfactory.com. Make sure that it's not spiking through it or going to be moving to a news announcement. It's just simple little things like that that make things just more about confluence. That's what we want here. Look at this. 1, 2, not the best trend line. I wouldn't trade this going, but look, it gives you a bit of confidence right on that point. I would love this to come up here and backtest that because I would actually probably take a trade on this. I'm not telling you to. I want you to explore this from an avenue of exploration. Find it yourself. You know, I've got 3 things here. Great. Excellent. When this comes here, this could be a really good opportunity, all based on time of day and what's happening in the marketplace. Okay, and like I said, for that to work through on that, I'm looking for a Fibonacci. If it breaks through on that, if it does, let's say it breaks through there, I bring it back. The possible likelihoods of it getting a nice reaction up to the 161.8 could be very high. Obviously, you're breaking it down and seeing what happens. But your stop loss, trade it accordingly. Utilize the stop loss, you know, depending. This is a nice big move, so I don't mind taking smaller lot size, but putting a stop loss maybe 20 pips behind. And as soon as it moves in my favor, 10, 20, 15 pips, if it does, move my stop loss to break even. But you're trying to find areas on a chart that stick with confluence. So hopefully I've kept that up there enough that maybe you can have a look at this trend line yourself on your charts and basically see what happens from an experimental point of view. Like I said, the 161.8 and the 200 are great measures for a move that's come down. Okay? For example, I'll just use this as an example. I didn't trade this, nor did I want to. I just want to show you literally where it came down to. 161.8. gets hit quite often. So remember, 161.8, if I'm looking for anything major than that, the 200 point of view as well. So that's what I'm talking about with regards to Fibonacci. Like I said, I don't use Fibonacci alone. I'm not going to use it alone. I'm mixing Fibonacci in with other trend lines, other price patterns, like those triple taps, things like that. If I see a triple tap happening, like I was talking about, let me break that back down for you. Even here, 1, 2, 3 hits. If I draw that trend line here, okay, 1, 2, 3 hits, and I draw the back end of this trend line here. This is a very steep trend line here. The back end of that, you know, that did break, and the back end got tested. Actually, that's actually a trade right there, because you've got that other trend line that we just did. We're discovering trades that I missed. This is great. But let's have a look at this. That red line is our initial trend that we took. Now, 1, 2, 3 points here. Hopefully there was no news announcement that came in. If I break that down even further so you guys can see it, this trend line, you hit there, came through there, again, that green candle closed outside this trend line. So when this candle opened, hopefully you can all see this first red candle, I'm scribbling over it, came back and retested. It's tested on the back of that major trend line here. You could sell that, because that is actually a carbon copy of what I did for the 22 pips. Sold it here, price comes down. Where's your profit target before it hits this trend line again? Let's measure this move with Fibonacci. Actually, what are we doing here? I'm getting confused now because it's backwards. Let me just not use Fibonacci for a second. Let's just basically calculate roughly the move. So the back end, you would have taken it around here. The stop loss would have been no more than 5-10 pips above this, because it's a nice area of support and resistance. Let's just say you got in, worst case scenario, 126.82. Down. This down here is 126.40, so that's 40 pips on that move. Now, if I stayed in the trade and I was watching it, yes, I probably would have taken it as low, and I'm not just saying that, because this trend line here is my out. That's my out, because I don't think it's going to break through it at this stage. So that's my full profit. But I'm taking profit on 10 pips, 20 pips on the second. You know what I mean? If I'm trading 2 lots here, 10 pips out, that's $100. Stop loss, break even, minimum. Trades down. This obviously you're going to get some type of, you know, price action here where it comes back. Didn't come back the third time, so your stop loss didn't get hit. Started trading down. Nice candle here. You know, bullish, you know, bearish hammer. Basically run that, and I've moved my stop loss now to 10 pips and let it continue down. And we just found that just now, and I'm not making that up. That's exactly what I traded before in my first trade. I just didn't see it because I was getting ready for the webinar. Literally, that's what I'm saying. So, like I said, going back, let me squeeze this out for you on the 15-minute chart. This now blue trend line takes precedence out as another trade. Like I said, we've got a nice little bit of trend line going on here. You know, look for most hits is what I'm saying. 1, 2, 3. I know you could have started it down here, but that's not the most direct hits. It never hit this. If I use this trend line, bang, bang, no. If you move it up a slightly bit, you're going to get more hits. That's what I'm talking about. The more hits, the better. Where did we go? Here we go. Roughly around here we like. Why? Started here, tagged there to the pip, tagged there to the pip, tagged there to the pip, broke through a little bit, didn't close really, came back out, tagged it directly again. So now this is what I'm talking about. Comes back, retests it anywhere around here, my stop loss is going to be beneath this trend line, going along there, and then I'm going to do a measured move. Let's say it goes from here to here. I know my first, obviously had taken 10 pips out, 161.8, which is at 127.86, is going to be where I end it, or see with those momentum up to the 200. Okay? Alright. How long has it been? It's been about 53 minutes. Guys, that's basically what I'm going to do for you today. I know we went through quite a lot. Hopefully you guys stayed with me. Like I said, I did record this webinar, so once again I'm going to try and get it out. But like I said, I don't like to waste time. I don't like to waste your time. I appreciate you guys coming out here because it means a lot here at Admiral Markets. the reason obviously we're doing quite well with our clients is the fact is that we actually take a bit of care and consideration into our clients. Because without you guys, obviously, we don't exist. It's as simple as that. We'd rather give you useful information. The guys who do specialize in currency trading. So, like I said, if you've got any friends, if you're not a trader of Admiral Markets, definitely come take a look at us. admiralmarkets.com.au. We have excellent accounts for trading this style with superb spread, excellent execution, and we also have other accounts as well if you like. Even compare us. It's obviously what we do here. It's good to have a relationship with our clients to be able to go through and see what works for them and maybe help them out along the way if we can. Like I said, I don't like to waste your time. Hopefully you get out a lot about what we've done. Obviously we're going to keep an eye out on this trading line over here and see what happens in the future. I'll try and keep a snapshot of it if I can see it happen tonight or tomorrow, and see what happens. We'll learn from it. Either way, if it works or it doesn't, you learn from it. But that's a good thing. So what I'm considering, guys, please look at your trend lines. Look at your inner trend lines. The more hits, the better. Okay, when they break and they retest, it's a great launching pad. Obviously, take in consideration other things, other patterns that you may get used to. Maybe you like looking at candlestick formations, things like that. Utilize it. Like I said, at the end, I am going to make sure that I contact each and every one of you for just a quick phone call just to see you guys understood, had any questions answered, and like I said, I'm here to help. Basically, it's what we do here, and like I said, we've got a Facebook page called Price Action Dave. If you guys want to just have a look at that on Facebook as well. It's a great little website. Hopefully put in a few bits and pieces in there for you to look and learn along the way. But like I said, hopefully you got a lot out of today's session. I'll be obviously getting in contact with each and every one of you. Thank you very much for your attendance. I really do appreciate your time. And look, have a great night, and hopefully you guys got a lot out of it. Have a good night.